Want to know Warren Buffett's secret to never losing money? It's a simple but powerful principle that can transform your finances for the better. It's not just about investing, it's about building a solid financial mindset, capable of handling challenges and maximizing your gains. Imagine the peace of mind knowing your financial decisions are aligned with a proven strategy. You'll finally find the key to avoiding losses, maximizing your profit potential, and building a solid foundation for your long-term financial prosperity. Unravel the mystery behind Buffett's #1 rule. Discover how to avoid common pitfalls and build a successful financial journey based on knowledge and strategy. This knowledge isn't just for experienced investors. It's for anyone who wants to understand and master their finances, build a secure financial future, and make more assertive decisions. Learn how to turn your dreams into reality, one step at a time. The pursuit of financial security is a constant in our times. The volatility of the markets and the countless investment options can generate uncertainty and, often, frustration. Understanding how to protect your capital and avoid losses is crucial to achieving your financial goals. In this scenario, Warren Buffett's #1 rule stands out as a fundamental compass. It reminds us that the key to success lies not in elaborate strategies, but in solid and consistent principles. Imagine avoiding costly mistakes that could take you away from your long-term goals. Understanding this rule requires, first, accepting the importance of discipline and patience in building wealth. Avoiding impulsiveness and emotions when making financial decisions is essential. You need to ask yourself, are my decisions aligned with my values and goals? Fundamentals such as diversification, careful risk analysis, and understanding opportunity costs form the basis for understanding the depth of this rule. The goal is not just to profit, but also to protect the accumulated capital and ensure a more secure financial future. Master your finances with Buffett's #1 rule. Want to learn more about how to avoid losses and build wealth consistently? Subscribe now and join the discussion. Share your experiences and learnings in the comments. Your feedback is valuable and contributes to collective growth. Together, we can build a solid financial mindset and achieve our goals. To apply Buffett's rule, define clear financial goals. What are your short, medium, and long-term goals? A well-defined budget is essential. Analyze your income and expenses, identifying areas where you can reduce spending and increase investments. A practical example. Instead of investing in something impulsively, do in-depth research on the asset. Evaluate its risks and opportunities. Understand the economic scenario. Patience is crucial. Avoid risky investments without solid foundations. Seek to diversify your investments and know your investor profile. It is vital to understand the opportunity costs. Identify the possible sources of losses in your financial life. Be realistic and aware of your emotions. Seek help from qualified professionals if necessary. Understand that learning and adapting are continuous processes. The key is consistency. Over time, small steps result in big changes. Imagine the situation. You invested your hard-earned money in an asset that seemed promising, but things didn't go as expected. Unexpected losses can undermine confidence and take you away from your financial goals. This is the reality for many people who find themselves in financial trouble without defined strategies. This turning point requires immediate attention. Impulsiveness can lead to wrong decisions, with consequences that affect your finances for years. Imprecise investment strategies can lead to a considerable loss of capital. It's time to act. It is necessary to recognize that building wealth takes time and requires planning. The lack of financial planning can generate catastrophic results in the long run. Leave emotion aside and adopt a more strategic approach to your finances. At this moment, Buffett's rule gains prominence. It is the key to avoiding this type of situation and building a solid financial mindset. Understanding risks, planning in advance, and developing discipline is the way to a secure financial future. The time to build a more stable financial future has arrived. The choice is yours. Continue in insecurity or take the first step towards a safer path. Understanding Buffett's #1 rule starts with discipline. Imagine investing in something you don't understand deeply. That's like playing the financial lottery. Careful analysis is the basis. First, define your goals. What is your desired return? How long are you willing to wait? Study the markets and the different financial assets. Understand your investor profile and your risk tolerance. An example: instead of following the crowd, research investment funds with a proven track record of return. See their strengths, weaknesses, and possible risks. These studies will help you make more informed and secure decisions. Remember, patience is a virtue. Don't expect quick and spectacular returns. A consistent long-term investment usually generates better results. Diversify your investments. Don't put all your eggs in one basket. This is a fundamental strategy to reduce risks and maximize your financial security. Study different types of investments. A common challenge is the temptation to invest impulsively, following fleeting trends. Avoid this. Do an in-depth analysis before investing your money. For example, don't be swayed by sensationalist news or spectacular promises. Market volatility can be scary. It's important to have an emergency plan and be prepared for possible losses. Creating a financial reserve to face unforeseen events helps maintain calm and discipline during periods of uncertainty. A good example is to monitor your investments regularly, but without panicking with small fluctuations. Long-term analysis is crucial. Stay informed, but avoid being carried away by emotions. Remember, building wealth takes time. Consistency and discipline are fundamental. Eliminate the pressure and seek the satisfaction of investing in your future. Plan strategic exits if necessary. Have alternatives and be prepared to adjust your plan according to the circumstances. Identify emotional triggers and how to control them. A crucial example is the importance of continuous financial education. Buffett has always emphasized the importance of learning and updating. This applies to both financial markets and investments. Consider the long-term strategy as an investment in itself. Learning to invest well is a valuable asset. The more you understand, the more assertive your decisions will be. Seek help from experienced financial advisors and professionals. They can guide you in making more thoughtful decisions. Be selective in who you seek guidance from. Track your progress regularly. Don't be afraid to adjust your plan. Remember that constant learning and adaptation are key pieces of success. Success stories of investors who have applied Buffett's #1 rule demonstrate the effectiveness of this strategy. Continuous learning and in-depth analysis are the basis for maximizing your potential. Research shows that most amateur investors suffer significant losses. This is often due to a lack of knowledge and planning. Understanding how markets and financial assets work is crucial. Data on human behavior in relation to investment demonstrates how impulsiveness and fear can lead to bad decisions. Learning to control emotions is fundamental. As an example, panic in times of financial crisis often leads to bad decisions and loss of money. Experiences of successful investors show that consistency and discipline are essential elements. They not only seek quick profits but focus on long-term strategies. Analyzing long-term results is a way to build security. Financial experts agree that financial education is fundamental. Learning about investments and risk management helps to make more conscious decisions and reduces the chances of loss. Learning about risk management protects your investments. The practical application of Buffett's rule, therefore, has real implications for people's financial lives. With deeper knowledge and consistent strategies, you can achieve financial stability and prosperity. Still have doubts about how to apply Buffett's rule in practice? Many wonder how to balance security with the potential for gain. The answer is to diversify, diversify, and diversify. Imagine a portfolio with different types of investments, such as stocks, bonds, and real estate. This reduces risk. Experts say that good diversification minimizes losses in one sector when another sector is performing well. A common question is, how much should I invest? There is no magic formula. It depends on your goals and your ability to withstand losses. Start with what you can afford to lose without worrying and gradually increase your investment over time. And what about following the market? It's important to stay up to date, but don't let the news control you. Keep an eye on relevant trends, but make decisions based on your studies, not assumptions. Remember, Buffett's rule is about building a long-term mindset. It's about patience, discipline, and a consistent understanding of the markets. It's about investing in yourself. In summary, Buffett's #1 rule is not about making quick money, but about building wealth consistently and safely. It's about avoiding unnecessary losses. It comes down to planning, discipline, and knowledge. You learned the importance of setting clear goals, investing consciously and diversely, and controlling your emotions. The key is to build a solid foundation for your financial future. Learning and adapting are fundamental. Now, how can you apply this in practice? Start by creating a personalized financial plan that considers your goals and risk tolerance. Study different types of investments and seek help from financial advisors if necessary. The next step is to monitor your investments regularly and stay updated on the market. Remember, knowledge is fundamental for lasting success. Don't forget, you are now more prepared to make more conscious financial decisions and build a successful path. Share your experiences in the comments. Reflecting on Buffett's #1 rule, we realize that financial success is a journey, not a destination. It's about building a solid foundation, not about making easy money. It's a long-term mindset focused on security and knowledge. Imagine a future where your financial decisions are aligned with your goals and where you have control over your own path. This is possible with planning and continuous learning. The path to financial tranquility begins with knowledge, which can be learned in steps. Learning to control emotions is fundamental. The pursuit of quick returns and the pressure for results can lead to mistakes. Patience and consistency are your best allies. Don't let fear or greed prevent you from following your plan. Remember, knowledge is your most powerful tool. Seek more information and continue exploring the fascinating world of finance. Share this knowledge and inspire others to build a more secure and rewarding financial future. The journey continues.